And to the economy here, the Prime Minister is preparing the ground for some bad news, it seems, this week. The national accounts are due out on Wednesday. These are the figures released every 3 months that tell us how fast or how slow the economy is growing. These June quarter figures we're going to see on Wednesday are expected to show a considerable slowing. And even Scott Morrison concedes they will be soft. But he's urging folks not to panic, pointing to the tax cuts that have flowed since June and should help prop up more growth for the following quarter, the September quarter.
I suspect the June quarter results will be soft. But what matters is the plan that is already in place to address that both now and into the future. I mean, the June quarter, of course, does not include the second of the cash rate reductions from the RBA, nor does it include the tax cuts that came through.
Let's look more at what we can expect this week. Chris Richardson from Deloitte Access Economics joins me. Thanks for your time, Chris. Look, what are you expecting to see on Wednesday in these figures?
Yeah, a weak number, but probably not a disastrous number. Trouble is, this isn't the only sign of weakness. It's been happening for a while. Basically, those falls in housing prices in Australia took steam out of the Australian economy. As our wealth went down, as our housing prices went down, we became more careful with our shopping. Big ticket items like car sales, they fell away, and the pace of housing construction. All of those negatives still playing out in the Australian economy right now.
Well, today, in fact, we see some business inventory figures that were surprisingly weak. What does that tell us about how business is seeing the economy?
Now, lots of people do see that as weak. There is a chance that the amount of stock left unsold on shop shelves, that fell. Now, there's a chance that was actually because sales were a little bit faster than businesses were expecting. So it's not necessarily bad news. And the other thing we heard today, of course, is that housing prices are going up for the first time in a couple of years. That combination says that the thing that's been the biggest problem for the Australian economy, the housing-related weakness, it hasn't gone away, but some of those negatives are starting to become less of an issue for Australia.
Bottom line, I guess the government will be happy as long as this figure we see on Wednesday, the quarterly figure, is in positive territory. Some are saying it might be in negative territory, and if you get two of those in a row, that is a recession. But what are you saying, Chris? You're confident this will be still a positive figure on Wednesday?
And we'll find out more tomorrow. Our best guess at this stage, off the back of tomorrow's data, is that Wednesday will still show positive but weak growth in the Australian economy. And part of the reason is that the global negatives have not yet been a notable problem for Australia. We keep hearing about all these horrible things happening globally. For Australia, though, the key has been that China has pumped out stimulus. That's kept coal and iron ore prices high, and it's been actually net good news for the Australian economy.
Well, I was going to ask you about the budget impact here. I mean, the budget, the pre-election budget forecast growth of 2.25% for the 2018-19 financial year. When we see these figures on Wednesday, they'll probably show that has not been met. How much does that impact on the budget bottom line, or is that offset by what you point to there, the stronger demand for our coal and iron ore?
And the stronger demand for coal and iron ore showed up in other data today. Company profits up again strongly in the last handful of months. Yes, the overall economy is not crash hot, but the bits of the economy that drive the budget, company profits, for example, driving company taxes, that set of figures looking pretty good. So the economy not so flash, but the budget should be increasingly in surplus. It would give the government wriggle room if some of the bad news, you were just showing Hong Kong, maybe it's Brexit, maybe it's push and shove India, Pakistan, the Iranians or the Saudis. There are a whole bunch of things that could go wrong. Were something bigger to go wrong, the government might need to do more. So far, though, given there's already tax cuts, there's already interest rate cuts, plus the promise of more interest rate cuts, I'd say, we're not in panic territory.
So when the Prime Minister says, don't panic, these might be soft figures. We've got a plan, though. The tax cuts have flowed since the June quarter. Is he right? You're suggesting there's no need to go, spending some of the surplus just yet?
I think it is right. I think it's so far so good. Yes, the economy is softer, but the cavalry is coming in a range of ways, not just interest rate cuts and tax cuts, things like a lower Australian dollar. There's a bunch of things, one way or another, that help. Having said that, it's a volatile situation, and in particular, politics is doing economies damage here and around the world, and so the government does need that top drawer set of plans that it can draw on if it needs to, where it does more, where it does the acceleration around infrastructure, where it potentially brings forward tax cuts. Some of the things that the Reserve Bank, that Labor Party's been talking about, it needs to have those ready if they're needed. So far, they're not needed.
Chris Richardson from Deloitte Access Economics, thanks so much for joining us today. Appreciate that.